This week on the VC React podcast, xAI and HUMAIN team up on a 500 megawatt data center in Saudi. Is this the start of an AI corridor with Silicon Valley, or just a giga scale marketing with insane power numbers? Founders Fund makes its first lead bet in Saudi with Mnzil. Is this a one-off tourist deal or the beginning of a long-term GCC thesis from top US funds? Climate tech finally feels real. Stratify is using geothermal cooling to cut data center energy bills in half. Is this just climate tech or the hidden AI infrastructure that will power the region's supercluster? And finally, robots hit the construction site. Buildroid AI is rolling out block laying robots in the UAE. In markets built on cheap labor, will construction robotics actually make economic sense? Let's react. Hi everyone, and welcome to a new episode of the VC React podcast. Every week we bring you insights and reactions from top VCs, LPs, and angel investors reacting to the latest news on startups, funds, and investment rounds. Let's jump into it with our guests for today. Almajthoob, partner at Middle East Venture Partners, MEVP, Hala Zahran, head of AB Xelerate, ABX, and my co-host Jamie Lane from FWDstart. In the video description, you can find more details on our guests, their LinkedIn profiles, and links to their companies' websites. Our weekly news is brought to you by FWDstart, a twice-weekly newsletter that breaks down what's happening in the startup, VC, and tech space. Before we dive in, a quick one. Ever notice how finance teams don't have one right way to work? Approvals in Slack, invoices in email, reconciliations in spreadsheets. That messy middle between contract signed and cash received is where time disappears and money stalls. It's follow-ups, escalations, statements, reconciliations, and the awkward nudge that turns into a chase. Most automation tools tell you to change your process to match their product. Okta does the opposite. It learns how your team already works and makes it faster. No major changes, no heavy retraining. From the minute a deal closes, Okta's AI agents spin up invoices, schedule and personalize follow-ups, reconcile payments, even surface financing options, then adapt when your approval path changes or those unusual cases pop up. Same process, fewer delays, faster cash. Teams at regional leaders like Kareem and Lean Technologies, plus hundreds more across MENA, use Okta to reduce the "where's the payment" shuffle and bring cash in sooner without forcing finance to work like product or sales. It's the kind of tool that quietly fixes the part of the business everyone tolerates but never loves. A shout out to everyone at Okta for sponsoring our episode today. Hi Jamie, what's happening this week?
Yeah, let's start in Washington, and we'll get that out of the way, and then we can move onwards. But look, there was a whole host of announcements last week. It was cool to see Ronaldo in the White House as well. It was a who's who at that particular state dinner. But
I think I saw Elon Musk as well, and many
they were all there. Yeah,
tech
everyone was
CEOs.
there. But look, I think as far as we're concerned, I think what was particularly interesting was that HUMAIN has continued its announcement sort of train. And I think the headline grabber was, we've spoken about it before, I think this rumored sort of data center partnership potentially between xAI and HUMAIN. And this is something to sort of come to fruition, as you mentioned the intro there, 500 megawatt data center being built in Saudi, going to be powered by NVIDIA chips, which are also now being allowed in. It was quite funny as well in terms of Musk sort of speaking about the amount of
the 500
gigawatts, which I think probably does little to quell sort of the skeptics when you're talking about, it's sort of like you're making up figures as far as that's concerned. And look, that wasn't the only thing from HUMAIN. They led the round for Luma as well, $900 million Series C. So tapping into that, I suppose, AI venture fund, which was announced at the time that they announced back a couple of months ago too, announced a partnership with Adobe as well, which was quite interesting. But yes, xAI is indeed entering Saudi with this particular data center.
Does it feel like a real corridor between the MENA region or GCC and Silicon Valley, or just one of those mega projects, heavy marketing mega
No,
projects?
I think it is real and tangible. I think it's look, it's you need cheap power and you need a lot of it. You need space. Saudi has an abundance of both. I suppose the only thing we're maybe slightly lacking is water from a cooling perspective. But we're going to get to that with a company later on who's going to be helped to that end. So no, I think it is. I think it's it is real, to be honest. And I think we're going to continue to see a lot more of this going forward.
Yeah. Hala.
I think it's definitely real. This is really building infrastructure backbone around the new digital economy. The way I see it, it's like building airports or building any other type of infrastructure, and it's a shift from narrative to actual commercial collaboration and partnerships. There's a feedback loop that's being created. You're investing, you're attracting workloads, you're building a super cluster, and then reinforcing the ecosystem. And it's really great to see there are partnerships, there are capital flows going, and there are different modes of collaboration. So whether it becomes a full corridor, of course it depends on the execution and the ecosystem maturity, but it definitely signals in the right direction.
Makes sense. Ali, do you think we will be the infrastructure hub for AI in the world?
And obviously, we're in a AI race, right? China, US, the GCC, they're all, investing as much as possible, building as much data infrastructure as possible. We're in an inflection point, just like what we had with, let's say, steel and coal during the industrial era. Then we had oil in the, post World War II era. And then, of course, we had internet. And now we have compute, right? And compute is going to power AI. And then AI is going to be, extending its fingers all over. I mean, it's funny enough, if you take a look at, the state of innovation over the past, let's say, 15 years, each time we had kind of like a new wave. So we had, of course, the wave of the internet and web apps, and then we had smartphones, and then we had decentralized apps and blockchain and crypto, and then, of course, we had IoT and Internet of Things. And at each state, EVs, of course, and autonomous vehicles. And AI is now basically going back and kind of catapulting every single one of these, foundational innovations, right? We have countries such as, China and Japan basically, betting on AI to replace the depreciating labor force, right? Over there, in China, I think in the next 20, 30 years, more than 100 or 200 million labor force workers are going to be out of the market. And, with, decreasing population, you need to basically use AI to compensate. Germany, Japan, all of them are looking at that. In the GCC, I think it's a little bit different. I don't know, any GCC, how does our infrastructure plug into the AI world and AI infrastructure, and what are the use cases, and how do we see AI implementing itself in the region? I think that's a bigger question mark. What are going to be, are we going to be, just like exporting oil, or are we going to be exporting compute power? I don't know. And, to the first part of your question, whether there's the beginning of the corridor between, the GCC and Silicon Valley, I think, corridor has always existed. Obviously, all of the sovereign funds and the large family offices have been investing in, Silicon Valley VC funds for quite some time. More notably, they have the likes of SoftBank and whatnot. And then, of course, you do have a lot of Silicon Valley VCs investing in our region as well for quite some time.
Yeah.
So the corridor always existed. And with AI, that's just another layer of, widening that corridor between the GCC and Silicon Valley.
Yeah, to me, it's really fascinating how energy is now playing a big role in compute, especially in compute power, because now we have cheap energy here, or cheaper energy than the rest of the world. And the rest of the world needs that energy to power the computers or the servers in those data centers. So if you're a founder today in Riyadh, or if you want to advise founders now in Riyadh and Dubai, Jordan, Egypt, would you push them to build on top of this infrastructure, or try to build tools that would sell to these data centers and AI players? What would be more lucrative? What would be the biggest opportunity?
Honestly, it's both. And we see this a lot when we talk about highly regulated industries. So when we talk about anything related to identity, customer data, which is very relevant in health and banking sectors, having access to local infrastructure is really crucial. It allows you to build faster, maintain, regulatory compliance, and really allows you to get over the hurdle of data sovereignty laws, et cetera, et cetera. So I think there's a very strong case for businesses that will build on that infrastructure. But equally, there's going to be a lot of opportunities around, energy optimization, monitoring, orchestration, everything related to these data centers and this type of infrastructure investment. And it's really, and there's a lot of money to be made there, right? We saw that in the, the rise of the internet, the Silicon Valley really story is there. So there is an opportunity for something like that to be established here in the region now with outsized returns. So it's really, again, it's about the speed of how the execution, the speed of execution on these, investments, and making sure that there is sustainable demand to justify the supply.
Yeah, this question is inspired by the fact that we're going to talk about this new company, Stratify, because they're creating new technology for cooling that would be needed for these data centers. So they're selling new technologies for the data centers. They're not building on top like what we used to see here. Ali, what do you think?
Yeah, no, I agree with Hala that there's opportunities across the board. The challenge is to navigate yourself within this new evolving landscape, right? I mean, HUMAIN is a how old is the company, right? It's like a less than a year old company now. Things are evolving very, very rapidly, and just how to navigate yourself within who are the key decision makers. What kind of products and services can you offer? How can you make sure, who are your competitors? A lot of decision makers are also not necessarily clear on what the AI strategy is for themselves. So whether you're selling applied AI to large enterprises or small startups, whether you're trying to provide services to infrastructure, data centers, whether you're trying to work with the local sovereign entities or the global ones, it's navigating yourself and figuring out who are the correct decision makers, what are the mandates being passed on. HUMAIN is a evolving entity in itself. You have another Saudi entity, Sadaya, which is also an evolving entity in itself, and the mandates of these different companies or organizations are evolving. You have G42 and out of UAE as well. They're acquiring different companies. They're partnering with G42 just acquired with Brain.co to provide enterprise AI for large enterprises and government authorities in UAE. And what opportunities will be open to local players, what opportunities are going to be, let's say, most likely closed off to the maybe the Americans or the Chinese. Navigating across this rapidly evolving ecosystem will be the challenge.
So it's a totally new ecosystem that's being built right now in front of our eyes, and we're not familiar with everything.
As investors, the biggest risk we have is us deploying in companies that are too early. They're ahead of the market, because this type of announcements really signals growth. We know the potential is huge. The promise is really large. And I think a lot of our companies will be ahead of the market. The market wouldn't be ready for them. There is still a lot of adoption time ahead of us. And I think that's the biggest risk for both investors and builders.
Exactly my line of thought. I wanted to ask, how do you as early stage VCs react to all this in the market? Because there are those huge companies talking about huge numbers and huge budgets. And how do you feel? Like, I feel intimidated. Like, am I needed now in the market? How do you navigate all this? Ali, what do you think? With all these big numbers, how can a VC fund navigate its place in this ecosystem, not just the founders?
I mean, I guess you go back to fundamentals. Do you have a solid product? Do you have a solid team? Do you have faith in the team's ability to navigate, across this evolving ecosystem and to even evolve their own product within this evolving ecosystem? So that's what you see. And then number two, you take a look at, at least some validation when it comes to business development, whether there's some POCs, whether there's actually some signed contracts, whether their ability to do business development, at least open up conversations, initiate POCs with different clients, not necessarily register, a lot of revenues on the table, but that's another thing. A third thing, we get some companies very interesting enough with a product with no revenue, but receive some acquisition offers from some of the global players, and they try to value those companies on that front. And as a VC and if you're investing, valuation becomes a little bit different. But, there's some validation on the product from that perspective. And then lastly, the other concern as well is to make sure, there's a lot of hype and a lot of founders come in with very big valuations, understanding that this is going to be the future. This is going to be responsible for innovation for at least for the next 10, 20 years. And they see these crazy numbers in the States and they believe that these valuations are quite high and there's a whole new set of risks in the MENA region and we try to make sure that we're pricing the risk appropriately. Again, that's just fundamental VC investments, right? Team, product, these healthy valuation at entry, let's say, and then each one of our own investments, it's quite different actually. Even for us, I mean, we try to invest in something that we do believe can be defensible in the long run, right? Whether it's you do have some startups, let's say enterprise AI, right? We do process automation. There's a slew of these, and the differentiation between a lot of them are very difficult. On that front, okay, let's see how much execution, let's see the team, let's see the product. On others, you see, okay, these guys are actually quite unique. They implement AI in a very unique way. They have a product that is quite defensible. I'm talking generally here, but again, just goes back to looking at the fundamentals of the startup and whether we like it or not.
Speaking of the corridor between Silicon Valley and the GCC, Jamie, I hear Founders Fund is back in the region, but this time as a lead investor.
Yes, their first lead investment in Saudi, and it's coming from Mnzil company. They build and operate housing for blue collar workers in Saudi at the moment. I think they're present across 13 different cities, and they do this using software. So basically, instead of employers having to kind of like find and maintain and coordinate the accommodation themselves, Mnzil comes in. They offer purpose-built facilities that kind of meet safety and comfort standards, and then they run everything through their platform. So addressing, I suppose, one of the major social issues in the region, really. $11.7 million Series A. We have Co2, first check-in, Amir Farah doubling down as well at this juncture. And yeah, to your point about this particular corridor, obviously Founder Fund's other investment is Huspi. Amir Farah has quite a good post on LinkedIn as well that outlines a small bit more about the context and background to this deal. But yeah, rather remarkable. Founder is still only 20 years old, the CEO. So the company has only been around for a year. I think Co2 first met them back in the start of September 2024. So yeah, it's been quite the journey so far.
I remember you telling me that it was a very quick investment decision. Can you tell us more
Yeah,
about that?
exactly. So I think the process, as Amir recounts it, is that his partner Nadine met Majid, and 2 days later, Amir hops on a call on Majid's day off, and by the end of the call, offers investment there and then, which obviously is quite rare. So he'd evidently seen something in him in such a short duration of time.
It seems Founders Fund saw the same
Yeah.
thing. But I wonder here. So Founders Fund is a Silicon Valley VC. They're mostly technical. They invest in deep tech, fintech, AI, and many other verticals. And now they're investing in Mnzil. Does this feel like a tourist deal, or they have built a thesis for the region? And why invest in such a company? I mean, it doesn't fit the profile of their portfolio companies. What do you think is happening here?
This is a highly selective fund that has put money and led on a deal that, wouldn't be considered very hype relevant at this point with all the AI and the fintech talk and the infrastructure stuff. However, I think, and this is synonymous with their previous investment in the region, is that we actually have a lot of operationally complex problems and they're real economy problems that need to be solved. Before, running, we need to walk, and I think this is an example of that. The opportunity is really large, the scale of the market is huge, and this is a very fundamentals heavy investment because the market, the founders, the opportunity, it's very standard logic to investing. Yes, there's a lot of hype for different industries, but there are a lot of real economy problems that require digitization and automation and require high quality companies to solve these problems.
No, I will just add, I mean, from our side, we do love startups that are trying to serve blue collar workers in the GCC. Actually, one of our own portfolio companies called CamelPay. They're based out of UAE. They're doing quite well there. It's a digital bank for blue collar workers. So they do payroll processing for employers, and then they provide a digital bank, remittance, BNPL, payback loan lending. And, it's a win-win-win business model, right? So the employers are happy because their blue-collar workers are catered to. The blue-collar workers are happy because they're finally getting services from the financial sector that actually meets their needs, where they were untargeted at all or unserviced at all. And then, of course, CamelPay is happy because, it works well. And the incumbent banks would actually offload their own clients, their own blue-collar worker accounts to CamelPay. So as a segment, it is vastly unserviced, and it's a huge opportunity. And from our own portfolio company, we definitely see this need and how the growth and value and the stickiness and how quickly these companies are growing. What is definitely interesting here in Mnzil is they actually do have earned wage access. I see they're also targeting more products and services for the blue collar worker, but also for the businesses, accommodation and transportation and catering. And that is an operationally intensive. I mean, they all start with asset light models. I could definitely see this company becoming much more vertically integrated, and because maybe you need to have better control over the operations, over quality, over SLAs, and we'll see. But as an opportunity, we love it.
Is it a fund returner, Ali?
Yeah, I think so, for sure.
It could be.
Yeah.
It has the potential to be a fund
I
returner.
mean, you're talking about more than 10 million blue collar workers across the GCC. You're talking about, over $120 billion of annual salaries. You're talking about, 50-60 billion dollars of remittance a year. So this is a huge market. And we're just seeing now fintechs and startups that are catering to this untapped market. I mean, it's a whole different ballgame, right? Obviously, it's very different, fundamentally different than your typical GCC, customer, which is fluent in English and is tech savvy, internet savvy, much easier to serve. This is a segment that you need to build a whole different set of infrastructure, even the way the app looks, language support, all of that. But it's definitely a huge market.
Let me stay with you for a second. If you were on Mnzil's board, what would be the single most important thing you would push them to extract from having the founders fund on their cap table?
I don't know, honestly. I mean, a company at the early stages, right? You just want to make sure that you're building as much, getting as much clients as possible. I think down the line, of course, you will have much better access to, to talent, more funds, better exposure. A company like this is also very unique very special to the GCC. I mean, typically, if you have, global investors, there's a lot of learnings from their own, they're always kind of like a couple years ahead. I don't know. It's a tough question, but without a doubt, I mean, one of the things I've definitely seen when you have like big pockets backing you, if things go south, you could always make sure that they'll fund you, they'll extend your runway. You can it gives you a nice cushion. And if things are going well, it's much easier to raise and close these rounds down the line. But at this stage, this is super early, so just get the products out and rolling. Maybe talent is something that you could tap into that is very unique, from the likes of Founders Fund. Other than that, I don't know. It's a tough question, honestly.
Yeah, it is. Yeah, I don't know.
Yeah, I
I
think
don't
there's
have
a
an
lot
answer.
actually
Hala,
to
what do
be
you
done.
think?
Of course, I mean, they definitely, there's of course some nuances around the GCC that don't always translate well. And as Ali said, there are learnings for these new funds at the lead rounds. But I think operational models and efficiency at the fundamental level continue to be the same wherever you go. So I think for these founders, they can learn a lot from peer founders through the Founders Fund, but also really stay focused on delivering a technology first platform, because there's always the risk that this could become a capex intensive business. And for better or worse, you have to stay true to the unit economics, you have to stay true to efficiency values, and having that kind of direction and access, I think, would be quite valuable. Access to talent, of course, 100%. What I would be generally worried about is some of these deals encourage founders to just go and focus on a subsequent fundraise, because now this is, of course, just announced, and everybody is suffering from FOMO in the investment world. So founders would be more and further discussions about fundraising at valuations that don't necessarily make sense. So this is definitely, they're very well positioned to just focus on execution, focus on efficiency, get the numbers for even a bigger and more interesting fundraise on their Series B.
Ask you the same question, Hala. Is it a fund returner? Do you think this has the
Absolutely.
potential to
Absolutely.
become a big unicorn? Okay, let me challenge that. They're focusing on a problem that's very specific to the GCC and very few countries. But if you take that problem and expand, or that company and try to expand to other markets, it's tough. I don't think they would expand to the US, for example, or to Europe. I don't know. Or maybe they would change the model to become a housing like Airbnb for employees, like Jamie mentioned. Do you think it would expand to other markets? Do the other markets have the same problem they're trying
I think
to
I'll
solve?
challenge you and say, just out of Saudi, we have essentially two unicorns literally doing the same thing. We have two buy now pay later companies that are becoming unicorns driven by the region. So we do have the capacity as a region to produce unicorn just by accessing the markets. And to Ali's point, this is really a huge problem to the market, and it touches everyone. It touches every single aspect of our lives. And I think a lot of the markets we are talking about have the necessary scale and actually the track record to show that unicorns can be created in the region. So expanding outside of the region, I can see maybe in LATAM, where there's also dependence on these things, maybe specific countries where, which I can't think of real examples that are similar to the GCC and the region in that aspect. But yeah, I think the region is more than enough to carry a unicorn in this type of model.
Okay, so the local market or the regional
Yeah,
market is
yeah.
big enough to create a unicorn in that
That's
specific
my take,
field.
yeah.
The labor market in the GCC, I would just say, could be drastically different in the next 30, 40 years, whether it's construction, blue collar labor, I don't know. So, I mean, talking about this opportunity being very special to the GCC, what does that, and if we don't have other markets, okay, how do we think of this opportunity long term? And does AI play a role in maybe shrinking that market? That's all.
That's a really good segue to the next company we're talking about. And
That
Jamie,
was the
maybe
idea.
we talk about Buildroid before we talk about Stratify.
Okay, look, let's talk about that then. Let's keep on the. We've been pretty infrastructure heavy, actually, haven't we, thus far today? But
Yeah.
Buildroid, a UAE base, so they've emerged from stealth, 2 million pre-seed funding, led by Tim Draper, who many listeners no doubt will have heard of. Previously backed Tesla, SpaceX, Skype, Robinhood, etc. So this particular company was only founded earlier this year, essentially integrating AI into kind of specialized general purpose robots that you can embed directly into contractor processes. So different kind of construction workflows. They're going to be pursuing a couple of different pilot programs in the UAE. I think Big Five construction is on at the moment this week. So I believe this was probably time to tie in with that somewhat. But yes, I mean, we often give out about the lack of deep tech funding or developments this side of the world. Here is one. What do we make of it?
Well, first of all, I'm so happy that we're hearing these names in the MENA region. We keep complaining that international investors or global investors are not looking at us as one of those top emerging markets, but I think that's not true. 2025 proved that we are one of the top emerging markets, and Founders Fund, Tim Draper, and many other global VC firms are investing in the region. But back to you, Ali. You said something about the future of labor in the GCC. How do you see the future given we have such a company replacing labor force with robotics?
Yeah, I think this one makes a lot of sense for UAE. Obviously, it's a huge real estate market. There's always construction going on. Same thing goes for Saudi Arabia. There has been some investments in 3D printing construction as well. And again, talk about how AI is kind of catapulting all of those innovations that we've been talking about over the past 15 or 20 years. Definitely construction and the fourth industrial revolution and IoT and the robotics. AI can further enhance all of these. Because we kind of reached, I guess, maybe a plateau, and AI is opening up the opportunities. If it's the same with 3D construction printing, I think it's going to take some time as we go through a lot of POCs, a lot of development. But I think it's definitely in line with long term, we definitely see more and more AI, whether it's logistics, whether it's contracting, whether it's construction. Especially as I mentioned earlier, this conversation. We have the likes of Japan, China, Germany that are betting on AI to replace a lot of their manual labor work.
Let me challenge you now, Ali, on that. So I was trying to help a company from Europe sell in Saudi, and what they're selling as autonomous driving systems that can be installed on trucks, so that the company can replace drivers with these systems. But when the potential client started calculating the numbers and hit us with the facts, it was like, it doesn't make any sense. Like, that system to be installed on a device would be 3x, 4x times the salary of the driver for a year. So for them, it doesn't make any economic sense now.
Yeah.
Maybe in the future.
Ahmad, to that point, I think when we think of cost, yes, maybe it doesn't make sense, but we're not just optimizing for cost, we're optimizing for quality, predictability. We're essentially thinking of the certainty of the outcome, not just the labor cost and the labor substitution. In that case, we really need to be thinking long term. And, there is a lot of effort and money and time wasted in rework, in standardization of processes. And that is all automated or hopefully optimized for now that we have more advanced AI, a different kind of level of the ecosystem. That just, really counters the point of low labor costs is what we're going after. I think we really need to also think of safety and a few other things that matter to these workers as well, where actually long term and even medium term, this is more cost effective.
So Hala, you share the same future vision with Ali, like
By the way,
many of those labor force. Oh, yeah.
No, like
Go
I was
ahead,
talking more about countries with clear labor shortages. That's where you see the opportunity. In the GCC, I don't know. I mean, but UAE and Saudi Arabia, there's a lot of construction, so definitely there's appetite to invest in the latest construction technology, just like 3D printing construction. But again, even 3D printing construction, right? I remember looking at a few. It's only economically feasible if it's like one floor. If it's certain, if it's standardized buildings. It's very, very specific to where it actually makes sense, let's say in the GCC. But beyond that, no. I mean, same thing with, so many technologies you could say that, like solar panels, right? I mean, even though we have so much sunlight, just gas and the petrol is so much cheaper. So, but of course, I mean, down the line in the future, things are going to be different. Once the economics shifts, you'll be forced to move into different, construction technologies and processes.
Yeah, technology gets cheaper.
I do think that innovation, it takes time or it compounds over time. So although today maybe we don't necessarily see this implemented in the street, maybe 5-10 years from now this will become the norm. Maybe it will take longer because there are other implications. I think people are also moving quite, arguably, generally people are thinking more about ESG and responsibility and, environmental, social aspects. And I think this could play a role in that for the construction industry.
Amy, what do you think? How do you see the future with robotics? I mean, AI and software is now replacing so many jobs, but it seems robotics with AI are now replacing people. What else can they replace? If you, I don't know, turn on your sci-fi
Turn on my
light,
foundation.
how
Turn
do you
on my
see the future?
foundation hat. It's a lot of sense as far as Dubai, I suppose, being the location. Even just thinking from a training data perspective, like the level of exposure to the different processes, different projects, have the capability to train on, to maybe hone in on what specific workflows makes the most sense to automate, where it makes more sense from a unit economics perspective, where it can actually have cost savings that make sense, because it won't make sense for every process. And I think we see the same things with AI in terms of, particular enterprise workflows and applications. It doesn't make sense everywhere, but there's very particular places where, yes, this process can be automated, is mind-numbing. You don't need to be spending 8 hours a day inside an Excel. I'm sure the same thing applies in a construction context to particular things as well. In terms of where robots are going to replace us elsewhere, hopefully we'll have AI robot podcasters, and I'll be able to just transplant
Oh, okay.
all of my limited, very, very limited knowledge into a humanoid robot, and it can take my place here moving forward, and it can just report back to me on an ad hoc basis.
Jamie,
And
that would be your
that's the future that
that would be your
I'm.
digital twin, I guess. It would still be Jamie, but it would be a digital twin.
Yeah, I'll take that any day of the week. Fantastic. There's a lot of things that have my digital twin do. I have a PlayStation 5 here that I haven't gotten to play in about 12 months. I would love to dedicate 6 months to catching up on that. So we live in hope. We live in hope. It's the
So,
hope. It's the hope that kills you.
you know what? I do not hope or wish for AI to take my place or a robot to take my place in this, specifically this, because I'm enjoying meeting people, you know,
Okay,
and
you get
talking
an
to
AI
them.
summary.
I don't want to
It's
lose
okay.
that.
We'll all have our AI agent. Our AI agents will do the podcast. They'll report back in terms of how we got on, and you just
You know what? Yeah, in that case, only if the guests send their own digital twins or their avatars to this, okay, I'll send mine. But if they're here, I want to be there
yeah,
too.
we can go for coffee. We can go play paddle or something while they talk about all this sort of stuff. And it's a leisure time world. This is the future, my friends.
Money will worth nothing. Who said that? I think Elon Musk said currency will not be relevant
Yeah.
in like the next 10 years. So, Jamie, move us to the last story for today, a new cooling technology.
Yes, Stratify, Saudi-based DeepTech at the sort of, I suppose, intersection of AI infrastructure, climate tech as well. Started earlier this year. Dr. Amar Al-Ali and Ahmad Al-Hani previously led subsurface and geothermal projects together at Saudi Aramco. So they have that deep domain expertise. Raised a 6 million seed round led by Outliers VC, participation as well from Shrook and Plus VC. Essentially, in terms of how it works, it uses sort of something they call prime loop technology. So taps underground temperatures to cool data centers, uses less electricity. I think they report energy cost reductions of up to 49% compared with conventional systems. So look, this is only going to be increasingly becoming a problem, as we mentioned earlier in the episode, as it relates to the data infrastructure build out in the region. So this is an interesting development. No doubt.
I think it makes a lot of
Oh.
sense. And from the beginning of the conversation, we were talking about data infrastructure, 500 megawatts of power. And we talked about, the scarcity of water. So geothermal makes a lot of sense. It's, geothermal is for long-term, low-cost cooling. So it makes a lot of sense. And again, at the beginning of the call, it's all about how can you navigate, reach the right decision makers, sell, make sure that you close these deals, secure the funding necessary, because I think there's a lot of capex typically associated with geothermal. But at the face of it, definitely in line with what's going on.
Do you see it as a climate tech company or an AI somehow related company?
Yeah, I mean, more climate tech, I guess. Obviously, AI infrastructure, it's all tied to AI. I mean, you have, in the States, you have I was curious about, okay, all these data centers. I mean, what's going on in the States? I think, electricity used for data centers in the United States jumped from like 4% to like 10% or whatever. And in certain states, like Virginia, which are known to host a lot of data centers, I think it's around like 20% of all electricity consumption is on data centers. We're a race to having more compute power. Of course, that is ultimately tied to the use of AI, because that's where the computing power is being spent on. And, it's part of the infrastructure necessary for all of that. So it is, of course, related to AI, but, at the core of it, it's a climate tech company.
Yeah, makes sense.
No,
Hala,
fully
what do you
fully
think?
agreed with Ali. I think this company really is very exciting because 50% of the data center electricity, is required for that. And I think it goes back to our previous topic, which is this is now an opportunity for a lot of infrastructure adjacent companies to come forward. I think the biggest challenge for the current structure of many funds in the region is how to evaluate and align the probably longer cycle of return for companies like that, because it's most of the funds in the region are designed for asset light companies, very high growth on the revenue side. I think the fundamentals of a business like this will be different. It will be very heavy on the R&D, very heavy on quality control and reliability. Sell cycle will be significantly longer, and potentially there's some regulation or specifications required around it. So if I think of an investor who would be leading these, it would have to be patient capital and patient GPs, I think. And always with our experience also with heavily technical deals or companies, you always need the strong technical teams, and then you need the sales guy who can open doors and mobilize this infrastructure. It's not enough to have, scientists running the company, if you will.
Yeah, what's fascinating to me is that this is not really a new technology. It has been there for a while. But with the AI and the data centers and the need for more compute power, this opened the door for the commercialization of these old technologies. But Hala, you touched on a really good point. We, as VC funds in the MENA region, ready to underwrite these kinds of technologies? You mentioned patient capital, technical VCs, etc. Ali, what do you think? Are we ready for this?
I'm not sure if we're ready for any of these AI deals. I mean, before AI, right? You had very easy, simple, like let's say playbooks for assessing deals, right? You take a look at, okay, what's the growth rate the past 12 months? You take a look at the unit economics, you take a look at margins, are the margins getting better? What is the market size? Let's take a look at cohort tables, let's take a look at repeat rates. And now with these AI companies, all of them across the board, are these VC plays? Are they not? Are they more like IT service or service-based companies? Are they going to be eaten up by the global players, or is there room for regional players as well? So, I mean, this question can be asked across the board. That is number one. Number two, let's say if they do have these long-term contracts, if we're thinking about exits, right, in the next 5 years or so, if they have these, long-term contracts with government-backed data centers, that we're at the beginning stages of these AI race. I think you could, relatively speaking, you can potentially maybe package it and sell it off to other investors. I mean, there's always a lot of appetite in general for these long-term, repeatable, reliable returns. Think about logistics centers, data centers. A lot of real estate funds just, offer, logistics centers, where Amazon is basically renting the space for the next 10, 20 years. So think about these long-term contracts that a company like this can secure. I think potentially maybe you can, package it and sell it off if you need liquidity. But also at the same time, it's a common saying, during the gold rush, you would rather invest in the jeans and the shovels rather than, on the actual, whether the gold itself, you don't know if it's real or not. So if you want to invest in the infrastructure at the stage, it's a much safer bet than, one single AI company. During the dot-com boom, maybe the IT service companies, the telcos, not necessarily the websites or maybe it's a Walmart or maybe it's a pets.com or webvan.com that, didn't go anywhere.
Thank you so much, Hala, Ali, and Jamie. Thanks again. And thank you, FWDstart, for bringing us all the news every week.
Thank you.
Thanks, guys.